Hi, and welcome to the Stock Scores Market Minutes for February 19th, 2018. This week, my topic, when breakouts matter. Then, of course, I'll do my market analysis and the trade of the week on Credit Suisse. So when do breakouts matter? Well, first, what is a breakout? It is a move to a new high on the chart through a price ceiling established by a previous high or perhaps by a trend line. Not all breakouts are equal. The best are those that come after a period of low price volatility, are accompanied by strong volume, and preferably have a rising bottom on the chart before the breakout. Now let's look at a couple of examples to explain this better. First up is a company listed on the Toronto Stock Exchange, Canopy Growth, T.Weed, and there was a number of breakouts in this chart. In fact, the chart has gone up so much that it's a little bit hard to see them all. Let's just look at some of the more recent ones. So I draw a line across there. You can see that level of resistance, and there was the breakout there with strong price action. Then we had another over here breakout with stronger than normal volume, and we even go back to these where there was breakouts, and you can see that the volume prior relative to the volume before it was stronger. Now also we had rising bottoms. So there we have bottoms rising. Here we have bottoms rising. This is a sign of optimism, which is important for breakouts to really work. One final thing, notice that the stock scores indicators are above 60 and the blue line, which is the signal stock score, spikes upward above 80. So you can see that there. It happens because the stock scores indicators are designed to find these good breakouts. Now that's a smaller cap company. Let's look at Amazon, a very large company, and we can apply the same thinking. Here is resistance. Here is strong price action breaking through resistance from a rising bottom with strong volume, stock scores spiking up, and Amazon did very well after that. All right, let's get into this week's analysis. And it was, I would say, a fairly easy prediction last week that the market would bounce because it had pulled back to its long-term upward trend line. And that's exactly what happened this week. We got the bounce. And now the question is, what next? And that is actually a harder thing to call. So let's begin with drawing a few lines in here. First, the downward trend line on the short-term chart has been broken. It did that Thursday, which was an important thing for the market to do. We are now in a short-term little upward trend. A little bit of weakness at the end of the day on Friday, which is a bit of a concern. However, volume was light going into a long weekend. So we'll see how things shape up early next week. But if this short-term upward trend line gets broken, then I think we could see a little bit of a pullback to start the week. We were emotionally oversold. We came back to the trend line where you would expect it to stall. It only stalled for maybe an hour and then finally broke through. So that's a positive for the market. Now let's look at the longer-term chart. And this is where we have drawn that long-term upward trend line, which held at the lows, bounced back. Now the question is, do we break to new highs through that high of January, or do we instead form some sort of falling top, maybe there, maybe here, and then ultimately roll lower and retest the trend line? It's a very difficult call to make. You really just have to watch that short-term hourly chart, let's say, and see how things are shaping up with the trends on that chart. For now, the bounce is in, but will we make a new high, or will we instead form a falling top? The Russell 2000, similar situation in that it held its upward trend line, certainly hasn't done as well as the S&P 500, but there's that long-term upward trend line. We've touched it once, twice, and now 3 times and held that. As long as we don't break the long-term upward trend line, this remains a bullish chart for small cap stocks. Onto the Toronto Stock Exchange, which has really had difficulty keeping pace with the US market. The downward trend line has been broken. That's a positive. We've made this little rising bottom. We could even say a head and shoulders bottom on the hourly chart. This is actually a 2-hour chart. But we still have to get back to those old highs, and that's a long way to go for the market. As long as this support zone here around 2260 on the XIU is not violated, I feel like we're stabilizing, but the market isn't keeping pace with the strength in the US market. When you look at this, the long-term upward trend line has actually been broken, and so that is a bit of a negative. I think best case scenario is the Canadian market's going to go sideways for the next little while inside that range, sort of oscillating in there. And therefore, I'm not super confident in the long-term direction of the Toronto Stock Exchange. I think it's just going to be a sideways market like it has been for basically about a year. Yeah, about a year there. So don't love the Canadian market right now, but there is some pockets of strength, particularly in some of those small cap stocks that are moving on their own story. Onto the TSX Venture, which is really where a lot of those small cap cannabis and blockchain related companies are being listed. You know, a lot of these companies don't have great fundamentals, but they have a dream, and there's a real influx of traders coming back to the market in chase of the dream of fast money. And that is why we've had some pretty good volatility in the TSX Venture market, which is dominated by those small cap companies. It is still stuck in this pattern. We had a breakout, we've receded back, held support. Now the question is, can we get back to the highs again? I kind of feel like we're going to bounce around a lot with a lot of volatility, and it's not going to be as easy to trade those stocks as it has been for the last little while, because a lot of them went parabolic and therefore got a little bit too emotional, and it's going to take some time to cleanse out that emotion. So I think a little bit more caution with those small cap Canadian stocks is warranted. Onto the Treasury market, which has been one of the reasons why, or one of the reasons cited for the weakness in the stock market. Of course, if bonds go down, like they have in the last couple of months, that means interest rates are going up, and that's, sort of impairs growth and that sort of thing. We have come down to long-term support in the US bond market. We're basically close to it anyway. We could have another bad week and still hold support, but we're probably due for a little bit of a bounce back in the bond market. And until that long-term support is violated, I wouldn't get too worried about this. The interest rates are still relatively low. They are not as low as they were 2 months ago, but they are relatively low. One important thing to watch in the US market is the US dollar. Globally, of course, it is the store of value, but that value is really losing value over the last year, and it is now at some important support zones. It's trying to hold it. We've had a couple bounces off that support zone, but until we can break the downward trend line, I'm not too optimistic about the US dollar. I think we could see further weakness. And if there is further weakness, those gains that you see in the US stock market are kind of tempered because the value of the US dollar for a foreigner is less. You know, if the market goes up 3%, but the US dollar drops 3%, it's a wash for someone who is trading that market in other currencies. So keep that in mind when you're looking at the strength of the US market. It's not as good as it seems given the weakness in the US dollar. Now, the weakness in the US dollar is helping gold, which is building a pretty good optimistic pattern over the last 2 years, really. We can draw a line like this to show the rising bottoms. We've got strong resistance here. This is a pattern called an ascending triangle. You can see that the oscillations are tightening in that pattern, and that means that confidence is increasing in the future for gold, and we have optimism because we have rising bottoms. Now what we need is a breakout through resistance. That would probably come with further weakness in the US dollar. So if you see the dollar weaken, expect gold to break out, and it could go on a little bit of a move as people say, hey, I don't want to hold the US dollar. I'd rather hold gold because the US dollar is losing its value. It's got work to do before that happens, but that's something to keep an eye on. I haven't been a big fan of gold for many years, but it's slowly coming back into favor as it's building that optimistic pattern. And oil, which also benefits from a weak US dollar because oil is priced globally in US dollars. And you can see that the upward trend line has held. We kind of ran away from it. We had a couple of ugly weeks. We've come back to the trend line where we should bounce and continue higher. If we don't bounce, if we, we've bounced for 2 weeks now, but if we actually break down through that upward trend line, well, then you have to change your view. So right now I've got a neutral rating long-term on oil, but it could resume its upward trend, and if it gets through that resistance level, then we're back in business on the oil rally, which has been decent over the last 6 or 8 months. And finally, the fear chart. You can see the real spike in volatility, which caused all kinds of problems for the volatility-related ETNs, particularly the inverse ETNs like the XIV, which lost most of its value with that big spike in volatility. And that volatility is still high. We're still, very high in terms of where we are here relative to where we were, but it is coming down, and if the market continues to stabilize, expect this to continue to drop. It's still showing that there is fear in the market, and I think that's an important thing to carry into next week, is that there is fear in the market still, and we are not out of the woods in terms of the correction. We need to hold that long-term upward trend line. So my ratings then, long-term, still bullish on U.S. stocks. The upward trend is still in place. Neutral short-term as we bounce around trying to find a bottom. Canadian stocks, neutral long-term, trading sideways over the last year, and bearish short-term as we really haven't made a good break of the pullback yet. Gold, neutral on both time frames, but it is building that optimism. So if we can get a breakout, then we'll go to bullish long-term on gold. And oil, neutral also long-term on both time frames. The market has made its bounce off of the upward trend line. Now the hard work begins. Do we, break to new highs, or do we form a falling top? Investors remain nervous, and that's shown in that elevated VIX, while the long-term trend is still up. So the buyers are still in control long-term. Gold could make a breakout if the US dollar continues to weaken. Oil is holding support at its upward trend line, and as I said, fear remains high. All right, on to the trade of the week, and this was my best day trade last week using my worm strategy, which really focuses on my action candle indicator, which is the little pink dot that you see right there. I bought Credit Suisse in the first 2 minutes of the day on Wednesday, Valentine's Day, and it really made me love this stock because it went steadily higher all day and ended up with about a 15 RR gain for the day. A little bit capital intensive because this stock, being a financial, is not that volatile. So it took more capital to take this trade, but still, when you can get a 15 RR return on your money in just a day, that's a pretty awesome trade. So that was, I think, for me, the best trade in terms of RR gain last week. Well, that has been the Stock Scores Market Minutes for February 19th, 2018. Hope you all have a great week in the market and trade well.